Hey guys, so here's a breakdown of Euro Australian dollar trade that I took this week. 1 to 3 risk reward, 135 pips profit. So I'll just share my thought process behind taking the trade. So if you look at the Euro AUD in the first place, you'll actually realize that price has been in some sort of downwards direction. So if you look from this side, price has just been dropping downwards. It's been forming lower highs and lower lows. So you would wonder why would I be looking for a buy position at this point when price is actually dropping seriously, yeah? But as you do know, I trade using supply and demand. So that is the same concept that I applied here. So anytime price is dropping, eventually at some point it will start buying. Now the buy movement could be a retracement or it could be a total reversal. But the whole point is that at some point you anticipate an opposite move and vice versa for the, um, bearish trade. I mean, every time price is going up, at some point we are going to have a bearish move. Anyway, so if I remove all the drawings on my chart, so we were having this very solid drop in price. So as price keeps on dropping, I'm anticipating that eventually at some point, the weakness will come into the market and you're going to see price going to the opposite side. So in other words, the more price is dropping, the more I'm anticipating to get a bullish trade at a certain point. So before I get the bullish trade, I must mark my demand zone because I'm only looking to buy at demand and sell at supply if I'm looking for a sell position. Now, if you look at Euro Australian dollar from the 4-hour time frame and you just minimize your chart a little bit, you realize that price has now been moving up for a while. Now, I want you to see the contrast in the time frames. But anyway, that's not the main point to focus. So your work as a supply and demand trader is very simple. You always want to identify the direction and mark the higher highs and higher lows. If it's an uptrend, if it's a downtrend, the opposite, you want to mark the lower highs and lower lows. So anywhere that the impulse move begins, which is the pump to the direction of the trend, is the beginning of the demand zone, and you mark it as a demand zone. So if you extend it to the right all the way to maybe somewhere here, next time price trades here, you'll expect to get some, reaction of a bullish trade. Same thing with this, which is the beginning of an impulse. This is also a demand zone. So it always just continues like that. It's just the same thing. And long story short, this is the demand that I used because we have a demand zone at this point. So I'm to remove the drawing. This is the beginning of an impulse. So you mark from where the move begins to where we have our first breakout candlestick, and you extend it to the right. That becomes a demand zone. So after knowing that this is a demand zone, I'm anticipating that when price drops to this point, there will be a possibility of getting some rejection and maybe it can start to pump upwards. Whether it's going to be a complete reversal or a retracement is none of my business. The most important thing is that I know I'm going to get a trade. So after marking my demand, which is here, because this is the next demand zone, I now come and look for my entries on the 1 hour time frame. That is the time frame that I always use to get my entries. And my criteria for getting entries is very simple. When price hits the demand zone, we want to get some rejection. We want to see the reaction and we want price to react in a manner to suggest that it actually wants to start buying. If price comes and hits the demand zone and it continues selling sharply, you cannot anticipate a bullish position. You'll have to continue, waiting for the next demand, which is below. Anyway, price came to the demand zone, and the first thing that we had is a very significant rejection. And it's not just one rejection, it's actually multiple rejections at this point. Then you also had another rejection. So the moment we have these rejections, to me, that is a very good sign because it is just telling me that the sellers are starting to lose, momentum. So after getting the rejection, which is our first confirmation, the next confirmation that we want to get is some sort of bullish confirmation in terms of either a pattern or some momentum candlestick. Now, if you check carefully in this case, we had some sort of, very, very big W pattern because price came back down and went all the way up. So this was a W pattern which is signaling reversal, a bullish reversal incoming. And as if that is not enough, we also had a very, very strong bullish momentum candlestick, which shows us that buyers are trying to kick in momentum, and it's very, very strong. So once I have my confirmation, now remember I already have two confirmations. The first one was the rejection and the other rejection. Then we finally have a complete bullish pattern. So after having the bullish pattern, I always want to come and get my entry here at the neckline always. So you wait for price to come and retest the neckline. So when price comes back to retest the neckline, actually this retest happened at 6 a.m. I was not on my chart at 6 a.m., but it came back and retested somewhere during the day at around 9 a.m. So this is when I got into my trade at the retest. But if I was awake at this time, I could still have taken my trade here. So you come and put your pending order and wait for price to come back at the neckline just to get a better entry point, guys. Don't be in a hurry to jump and start chasing price when it's up here you want to buy at this point. So just wait for it to come and retest. If it doesn't retest, well and good. So we do have our entry. My stop loss is usually roughly 40 to 45 pips on this pair, and I was looking for a risk reward of 1:3. So that was 135 pips roughly. Yeah, and my take profit got hit. So that is my thought process behind taking the Euro Australian dollar trade. And if you've been watching my breakdowns consistently, then you will realize that I don't change my trading style. I just trade the very, very same way. So it works for me as long as you're consistent with it. You'll always find trades. So just invest in, getting the Forex knowledge. It's very important because a normal person would look at this market and say, AUD is going down. So they will not understand why you're buying at this point. But you see, it takes you to have the knowledge for you to even understand that we have a demand zone on the 4 hour time frame, and for you to come and start looking for your entry point and making sure you have enough confirmations. It takes you to have the right Forex knowledge.